Hello and welcome to the beginner's guide to the 50 MA support. Now for those of you who do not know what is the 50 MA, it's a 50-day moving average, and there are two very powerful moving average that investors and traders look at. They are the 50-day moving average and also the 200-day moving average. And today we're going to learn about the 50-day moving average. Now what are you going to learn? Number one is how to use the 50 MA as a subjective support. Number two, how to use the 50 MA to find price support. And thirdly, how to find high probability trading opportunities using the 50 MA. So here's the general rule. When a stock declines to the 50 MA, it can often find support and bounce back up. Now let's take a look at this chart here. We have the simple moving average 50 means 50 day, and this is the 1 day daily chart of American Airlines Group, and this blue line is the 50 MA. I've colored it blue. You can put whatever color that you want. So generally I'll use the blue line as the 50 MA, and here is declining and then sloping upward here, and these are candlesticks, these are prices, and look, when it corrected to the 50 MA, it found support and bounced up. So with this knowledge in mind, you can actually take advantage of this phenomenon, if you will, to guide yourself in the market and also probably to find trading opportunities. Now, however, there's something is that sometimes it works and sometimes it doesn't. So it depends really on your skill and your expertise levels. For example, here it corrected, found support a bit and then declined, only to move back up. And here it declined and it did not find support but corrected all the way here. So if you were a trader looking at the 50 MA, especially if you're a beginner, you would take this trade and then you take this trade and you lose money, and then you take this trade and you lose money, and then you kind of think, hey, what they teach in textbooks and the gurus teach, experienced traders teach, it does not work. It works at one time, but the other two times it does not work. But here's the thing. Why it works sometimes, why it doesn't work sometimes, there's always reason. And it depends on your skill to weed out those that are not good and only trade those that are good. So I hope by the end of this presentation you will have a clear idea, or at least some idea of when it works and when it does not work. Now here are some other tips or rules that you should take into consideration. Number one is a rising 50 MA is a better support than a flat 50 MA. So this is a declining MA, here is flat, but a rising MA is a better support than a flat 50 MA. Now the reason is this: when the 50 MA is rising, generally it's telling us that the stock is bullish bias in the midterm. So if it's bullish bias, there is a probability that it might move higher as compared to when it's flat or sloping down. When the 50 MA is sloping down, it tells us that midterm the stock is bearish bias. So you want it to be bullish bias before you enter trade, isn't it? And here the stock corrected to the 50 MA, and look how nice it rose from here all the way up to here, 167. Number two, use the 50 MA and look left for price support. So the 50 MA is actually a guide for you to find price support. The 50 MA is a subjective support because everybody looks at it and think, hey, it's gonna stop dropping. So it's actually subjective. 50 MA is derived from price itself, but price itself is king. And price itself is actually a real support. For example, if you see the 50 MA here, your eyes should look to the left and see, is there any price support? Well, here we have a price support because there is a sideways trading around here. And when the stock corrected to the 50 MA, we have also price support on the left, and this makes it a more powerful reversal. Now, number 3, a bullish reversal chart pattern at the 50 MA is very powerful. So not only do you want to look at price support, you also want to look at bullish reversal chart pattern. For example, the correction here, what can you see? We have a double bottom chart pattern here. So when you have a stock dropping to a subjective support, the 50 MA, and there is price support on the left, and there is a double bottom formation, well, it's like a high probability trade. If you buy here, you have 3 technical concepts that are supporting it. That's why the stock goes up. Okay. Now, here's a tip here. Look for long setups when the stock is above the 50 MA. So when a stock is rising and above the 50 MA, above the rising 50 MA, you should look for continuation patterns, because many times they work quite well. And here we have the stock rising all the way, and then it kind of traded sideways to form a continuation pattern. And look where the 50 MA is rising and is meeting the price, and then it breaks out. And this can give a very nice bullish setup, even though it only rose quite a bit. Traders can, for triangle setup, traders can buy here as it trades above the upper trend line, put the stop loss here, and I think it's more than 1-to-1 risk reward ratio. Now, when the stock is below the 50 MA and is declining, it's bearish. But when a stock crosses back above the 50 MA, it indicates a change in trend. So, for example, here the stock formed a triangle pattern. Triangle pattern can be a bottoming pattern as well. And the moment it breaks out from this triangle pattern, it also went above the 50 MA, and you can see how nice the rise is. So if you at this moment find a lot of value in this video, do subscribe to my channel for more awesome stock market guides like this. Now, why does it work sometimes but not at other times? You know, there will come a time where you look at the 50 MA and sometimes it works, you take a trade on it, but the stock drops to the 50 MA and you wonder, hey, why is it that these 2 times works and the other 2 times does not work? For example, the stock declines, this Arch Capital Group, stock declines, goes below only to go back up. It doesn't work. And here we have the stock having a very big negative bar, goes below the 50 MA only to go back up. And here it works very well. The stock stopped dropping at the 50 MA and goes back up. And here we have the stock dropping but finding support, goes up a bit only to decline. So why does it work sometimes but not at other times? Well, the thing is you must have a convergence of technical concepts. That means not only the 50 MA must be there, you must have many other things that confirm whether the drop will meet support, or whether there are many other things that you need to take into consideration. For example, here the stock went up, corrected, and here it was able to find support at the 50 MA. But not only that, if you look left, there are support areas here, Right? So the path of least resistance would be upward instead of downward, and that is why it goes up. Now, sometimes you'll meet a situation where there are a lot of technical convergence, but still the trade does not work out. The support does not work. Why does this happen? It's part and parcel of trading. So if you have a trading strategy that's 70% successful, 75% successful, that means that you have 25% to 30% of chance that it might not work well. So if you're a trader, you're a technical analyst, you want to work on probabilities rather than certainty. Now, the beauty of it is that sometimes when the stock goes down but goes back up, is you need to look at the slope of the 50 MA. Remember, if the 50 MA is rising, it tells us that it's midterm bullish. So even though the stock dropped below here, it eventually rise again. Even though it dropped below the rising 50 MA, it rose again. But there will come a time that the MA might curve down, for example, here, and things don't look good for the stock. Now, there's a reason for it. Sometimes the stock may be breaking an important trend line like here. The moment it drops below the trend line, it also goes below the 50 MA, and there you have a nasty sell-off here. Now, one of the things that you will realize as you look at the 50 MA is sometimes the stock may not touch the 50 MA. For example, here the stock went up, corrected, and just right where it's near the 50 MA, it goes up. It didn't even touch the 50 MA, but a lot of people were anticipating, and those who know that, hey, this is a support area. But if you look left, if there is price supports, the stock can move up. You look here on the left, there is support here, here, and here. This was a prior resistance, which once overcome becomes a new support area. And that is why when the stock drops to even not touching the 50 MA, it goes up. So this is a beautiful correction to support, and this is a beautiful setup. And because the MAs are rising, you can see why the stock keeps on going up and up. A rising 50 MA points to midterm bullishness. And here we have another example where the 50 MA support the stock. It corrected, formed a green bar at the 50 MA after many red bars. But here is also prior highs. This is a support area, and that's why it went up from there. All right. Now, consolidation at the rising 50 MA can sometimes be very, very powerful. For example, you see the 50 MA rising, and the stock is actually rising, and there comes a time where it trades sideways a bit. When the stock trades sideways after some rise, we call it a consolidation. You can actually draw a rectangle over it, and the moment it breaks out, it can go higher. This is consolidation breakout. And when you see a stock meeting the rising 50 MA and it breaks out of a consolidation, this can be very powerful. It can be tradable. You can often buy as it breaks out, put the stop loss below the entire consolidation, and it can rise up. Okay. Here we also have examples of how the 50 MA helped to support. Here we have a gap down, but because of the 50 MA area, it quickly regained, closed here, and went up for a couple of days. And here it corrected, and the 50 MA helped to support the stock. Okay. Sometimes these small moves can just decline, move back up because of the support in the 50 MA. Now, there are times when consolidation does not work. Sometimes the stock just trades sideways and break down. Even though it's meeting the 50 MA, it was actually trading up and down 50 MA. And this was kind of like a sign that the breakout might not work so well. So when it break below the consolidation, it went a bit lower before moving back up. As compared, you look at the situation here where the 50 MA rise and only meet the price near the breakout area, while this, it was going up and down the 50 MA. So a strong breakout usually trades sideways a bit, then meet the 50 MA before breaking up, as compared to moving up and down the 50 MA. Now, a correction to support area and rising 50 MA can also be very powerful. For example, the stock went up here, it corrected to the 50 MA, right? And we have price support here. This was actually a resistance area, but the stock was able to overcome it, and hence this area become a support area. And you can see how the stock found support at this rising 50 MA and also price support. So after that, it rose very well. So when you have a situation where the stock drops to support and also the rising 50 MA, you can often find very nice upward moves. Now, by combining chart patterns and candlestick patterns with the 50 MA, you can often find tradable buy setups. Now, what are chart patterns? Chart patterns are like double bottom, triple bottom, reverse head and shoulders. And candlestick patterns, what are candlestick patterns? Candlestick patterns are like doji, like bottoming tail, bullish harami. So in itself, we can make a very long series of lectures on chart patterns alone and candlesticks pattern alone. But I'm teaching you here how to combine the 50 MA with chart patterns and candlesticks. For example, we have this rising 20 MA, rising 50 MA. Stock was also rising and correct, and then it formed first a bottoming tail and then a second bottoming tail. Now this was a very strong sign that the stock wants to go up, and that's why it went up. And here we have the stock correcting, making bottoming tail, bottoming tail, bottoming tails, which are bullish reversal candlestick patterns. And then we have some kind of double bottom here, and when it meet the 50 MA, it rose all the way. Remember, a rising 50 MA points to midterm bullishness. That's why if you buy here, you can actually hold for quite a long time. If you buy here, you can hold quite a long time and see quite a lot of gains. Now, there is a difference between sharp correction and gradual correction. And if you see a stock rising and it has a gradual correction is where the stock declines slowly to the 50 MA as compared to it rises up and then a sharp crash. That will be very, very dangerous, and sometimes the 50 MA does not even hold if you have a climb up and a sharp correction, sharp crash. So when you see a gradual correction to a rising 50 MA and also there is a price support on the left, remember when you look at the 50 MA, always look to the left if there's price support. So if you see gradual correction to 50 MA and the price support, it can really help the stock to move higher. And because rising 50 MA points to midterm bullishness, if you buy here, you can actually ride the stock higher by quite a long time. Now, chart pattern, here we have this IDX laboratories. This stock correct after rising, corrected and make a double bottom, and it had a rising 50 MA, and actually you can see it corrected below the 50 MA a bit, but it formed a bottoming tail and then it rose up for 1 or 2 days. Sometimes this is a lesson here that sometimes stock can go a bit lower below the 50 MA, but if chart pattern and candlestick pattern is strong, then the buy setup can still work. So I hope you found a lot of value in this beginner's guide to 50 MA support. Do subscribe to my channel if you want to learn more about awesome stock market guides, and I'll see you in the next one.